What's going on, everybody? Back at you guys with another video. I want to keep showing you guys these weekly charts here, guys. Now, if anyone thinks that this market is, since 2023 at least, is bearish, you guys got to show me where. Technically, since the start of the year, a lot of these stocks either consolidated and are now breaking out of the bottom of the range, or have just been on monster bull runs since the start of January. Look at things like Apple or things like Nvidia. If we look at Mr. Softy here, Mr. Softy has basically been kind of consolidating, and we really had this breakout in the middle of March. And you can see Mr. Softy here is looking to test 291. This is the price target. This is extremely bullish, guys. This is holding the 100 simple moving average on a weekly time frame. We've got big breaking out candle, engulfing candle here going back 2 weeks. We've got a little bit of consolidation and a pause here, which is also a hammer candle, and now we're starting to take out the highs. The highs of 283.46 are this year's highs, and we are starting to break through them. This is going to be on full breakout mode into tomorrow and next week with the price target of 291. Again, right now is a time where you do want to put a little bit of risk on. As long as we're holding the 5-day moving average on a daily time frame, you want to swing these overnight, use the previous day's low as your stop, and you just want to continue to play the gaps, continue to play the gap up, play the gap up, play the gap up. Gaps up, you sell for some profit, you hold a runner into the next supply zone. You add to your position on the dips. When the dip gets bought, you continue to do the same. You hold for the next gap up until we show that we close below the 5-day moving average on any one of these tech stocks. We have to continue to be bullish bias on a day in and day out basis until we get proven wrong, right? That's all trading is. Are we going to be right 100% of the time? Absolutely not. But until the market proves us wrong, we have to go with the flow of the market. The last thing you want to do is be looking at the market 6 months later down the line and say, what the hell happened? I missed out on 100 points on Microsoft. I missed out on 150 points on Nvidia. Just to kind of be very transparent here, Nvidia has been on a 150 point run since the first week of January. Nvidia is one of the top stocks that I like to trade on a day in and day out basis, along with Tesla, and I have been trading this stock on dips. I've been trading this stock on breakouts, and then on dips, and then on breakouts, and then when we do get 2 or 3 days worth of pullback and we lose a short-term moving average, I'll scalp it for a short, I'll cover before we get into demand. That's what it's all about. But if you've only been around the market in COVID, when everything was just going higher and higher and higher, and then it stopped, and then you just lost all your money in the last year and a half, where every time you try to do that and you just get trapped and you get destroyed, if that's all you know, then you don't understand that it's go time. Then you don't understand what technical analysis is. You don't understand that the market is breaking out. If you look at the triple Qs, right? I watch the triple Qs daily. I also trade the NASDAQ futures. Why is that? Because 99% of the stocks that I trade are located within the triple Qs. So I always want to know what the NASDAQ 100 is doing. If you look at the NASDAQ 100 today, we finally broke a new high for 2023. Now, does that mean that the market is not going to go lower? Does that mean that the market's never going to see a new low? Of course not. But for right now is where we want to accumulate a bunch of assets. We want to make a bunch of money. And then when the market does consolidate and when it does pull back, we want to just scalp short, scalp short, scalp short, let it come into support. And then we want to play the bounce again, right? That's exactly how you do it. If you don't understand where your supply and demand zones are at, you're going to have a tough time navigating the market on a day in and day out basis. You're going to come in one day thinking, oh, I think we're over, we're overbought. I had someone 2-3 days ago on social media say, do you think this is overextended? I said, how can it be overextended when we just broke out, a month ago? Overextension is, 4, 5, 6, 7, 8 months down the road, and we've just been screaming higher. Overextended doesn't mean because we had a couple of green days. If you look at something like Mr. Softy is not overextended. It's barely consolidating. We had a green engulfing candle here, getting over all this price action going back to last year in 2022. Finally took care of business here, and now we're resting, looking for the next leg higher. Anything over 291 definitely has room into 333. Do not be surprised if 6 months down the road, Mr. Softy tests 330s, okay? If you miss this whole move because you constantly think we're going to put in a new low, That's your bad. Get around people that know what they're doing. Learn technical analysis for yourself. Stop looking for people to tell you what to buy. Stop looking at everyone on Twitter, what they're doing or how many thousands of percent some, master guru made. I see so many people posting up, these outlandish gains, right? 10,000, 20,000, $50,000 days. Great. Am I saying that these people don't make that kind of money? No. But if you are constantly, as a newer trader who maybe necessarily doesn't have a large account like these people, if you are following these people because you just want to piggyback off what they're doing, you're going to get destroyed. And if you've been around the market long enough, in 2020 and 2021, and especially 2022, you'll notice that you got destroyed. You got absolutely wrecked. What you need to do is learn your mindset and your emotions first. 90% of trading is down to mental mindset. Okay, your emotions. Managing your risk is number 2. Learning technical analysis is number 3. Having a strategy is number 4. Everyone and their mom, everyone has a strategy. All strategies will work. What doesn't work is the strategy tailored to your personality. You need to work a strategy that tailors to your personality risk-wise, because if you're risking too much on a trade, you're going to get emotional, you're going to stop yourself out, you're going to lose money, only to see the trade go in the direction that you thought it was going to go 2 or 3 days later. If that has happened to you, you're trading too big. If you're trading 5 contracts, you need to trade 3. If you're doing it and you're trading 3 contracts, you need to trade 1. If you're trading shares and you're trading, let's say, 5-10 lots, maybe you need to trade 2 or 3 lots. If you're getting emotional trading 1 lot, which is 100 shares, maybe you need to go down to a half of lot or 25 shares, right? Yes, I understand you're not going to make that much, but again, if you catch a multiple day run and the stock goes up $2, $3, $4, $5, you're talking about making a couple $100 on 50 shares, which is not bad. If you can kind of do that and take your cash, that's how you grow a real account. It's not about, taking $1,000 account, risking all of it on as many options contracts as you can buy and hoping that it goes up 100%. If you think that you're going to take $1,000 account and make $500 today and $1,000 tomorrow and $600 the next day, you might do that for a few days, but it's going to take that one time where you're wrong, you get emotional, you panic, you hold too long, you add to your position sizing, and then you get wrecked. It's about, if you have $1,000 account, take 50, take 100, take 60, and keep doing that consistently. Manage your emotions, manage your self-control, manage your strategy, manage your risk, and journal. Write down what you're doing wrong. Write down how you felt in the trade. Were you nervous? At this point in stage of the game, I play with the position sizing where I can increase my position sizing, but I do not, because I keep it the same, because when I enter a trade, I feel absolutely nothing. I do not get emotional when I'm in a trade, whether I win or lose, because I understand it's a probabilities game. I'm going to lose. My strategy is not going to win 100% of the time. I'm going to lose maybe 4 or 5 trades out of 10, but I know that on the losses, I'm going to be so much smaller than the wins, because my risk management is key. I hope that makes sense. Look at Mr. Softy, guys. Look at the weekly time frame. We've got room into 291. Again, I'm not a financial advisor. I'm just giving you my opinion on where I think the stock can go and what I'm looking to do with the stock and where my price target is at. Personally, 291. But I'll see you guys on the next one.